Hey guys, welcome back. Now, Raoul Pal has just sounded the alarm that things could be getting much worse for stocks and the crypto market. Now, Raoul's been relatively quiet on Twitter over the past few weeks, but recently he's now sounded the alarm saying, seeing energy stocks, oil, commodities, etc. all in the red starts to raise the risk of a full correlation of one accelerated panic. The only place to hide would be the dollar and probably bonds because everyone is short, and yes, crypto would get caught up too, but not new lows. So clearly bearish as he sees all the markets coming down over the next couple of months. And so in this video, we'll be digging into the latest thoughts and insights of Raoul, but also how he plans on investing as the markets are coming down over the next couple of months. As always, if you do enjoy anything in the video, then drop a like. Always appreciated. Okay, first up, unfortunately with investing, markets are cyclical and they do go down as well. So as far as the next couple of months go, here is how Raoul sees things playing out.
Hi everyone, just a very quick update from me. Look, the markets, I was expecting the markets to have found some sort of traction to the upside, and that failed. So my DMARC counts had failed. I haven't shared many of these with people, but I just thought the setup was getting concerning enough that I should put an update out over at Real Vision Daily Briefing. So what I've seen is that the market rejection of this recent rally has been fast and severe. What's really interesting is things like energy stocks have been slammed as well. Oil stopped going up, commodities are going down, the dollar's going up significantly. Bond yields have stopped rising. If the Nasdaq breaks the recent low, it's forming a large head and shoulders top. You can see it on my Twitter feed where I've just written about this. If that is to go, then we've got a significant amount of downside to come in the coming weeks. And it feels like this rolls into the summer if that's the case. And we could have a sharp correlation of one sell-off where everything sells off at the same time and every position gets taken out and shot. So whether you're long oil, long gold miners, short bonds, all the trades everyone's got on, the whole lot gets taken out, including the equity markets. Be really careful. We knew that the interest rate market was going to break something. Feels like it's going to break the equity market, and I think growth will follow, meaning that the growth of the economy will follow. I do think eventually this is the thing that's going to stop the bond market rising and the turnaround in yields that I've been looking for. So it's part of my big picture view. I didn't think we were going to get accelerated downside in equities. I thought something else would break first, whether it was going to be China or Japan, but it feels like it's potential to be equities. So look, there's no certainties out there. I don't know. I have been buying the kind of riskier growth names into weakness over a period of 8 weeks, and I've only just started that. So I'm kind of looking for this downside to layer into positions of stuff that I want to get into. I know a lot of you are interested in crypto. Obviously, crypto will get caught up in this and will go lower, but I think we're all used to that going up and down right now. I don't think it takes out the low, so I think it's just more noise within this wide sloppy range we've been in for the last year and a bit. But it could scare a few people. So look, just be careful out there. There's no certainties. I don't know. I'm not trying to sound the alarm. I'm just trying to sound the caution to say, look, be careful. Things are uglier than they seem. And the interest rate market, as ever, is going to break something right at the top of the chart of truth. Something always breaks, and it feels like it's going to be everybody's portfolio. Good luck.
So clearly not painting a very positive picture. He referenced a key support level on the Nasdaq, saying if that breaks, then there'll likely be significant downside, not just in tech stocks, but across the board. So following on from 2021, where it seemed everything was flying high and we really couldn't go wrong with our investments, we now find ourselves more in an economic winter. Next up is a clip from Ray Dalio's Economic Machine, and if you haven't seen it, it's about 30 minutes long and it's excellent. I must have seen it at least 5 times. But this 2-minute clip explains more about what's going on right now as everything begins to contract following a boom time.
Over decades, debt burdens slowly increase, creating larger and larger debt repayments. At some point, debt repayments start growing faster than incomes, forcing people to cut back on their spending. And since one person's spending is another person's income, incomes begin to go down, which makes people less creditworthy, causing borrowing to go down. Debt repayments continue to rise, which makes spending drop even further. And the cycle reverses itself. This is the long-term debt peak. Debt burdens have simply become too big. For the United States, Europe, and much of the rest of the world, this happened in 2008. Now the economy begins deleveraging. In a deleveraging, people cut spending, incomes fall, credit disappears, asset prices drop, banks get squeezed, the stock market crashes, social tensions rise, and the whole thing starts to feed on itself the other way. As incomes fall and debt repayments rise, borrowers get squeezed. No longer creditworthy, credit dries up, and borrowers can no longer borrow enough money to make their debt repayments. Scrambling to fill this hole, borrowers are forced to sell assets. The rush to sell assets floods the market at the same time as spending falls. This is when the stock market collapses, the real estate market tanks, and banks get into trouble. As asset prices drop, the value of the collateral borrowers can put up drops. This makes borrowers even less creditworthy. People feel poor. Credit rapidly disappears. Less spending, less income, less wealth, less credit, less borrowing, and so on. It's a vicious cycle. This appears similar to a recession, but the difference here is that interest rates can't be lowered to save the day. In a recession, lowering interest rates works to stimulate borrowing. However, in a deleveraging, lowering interest rates doesn't work because interest rates are already low and soon hit 0%. So the stimulation ends.
So, with the Fed printing record amounts of money and interest rates being held to historically low levels for many years, the cycle reverses and everything begins to contract. But then add to that, right now we have high inflation, so even staying in cash gets punished. So as mentioned at the beginning, unfortunately, markets don't just go up, so we also need a plan for when markets come down. And as far as Raoul is concerned, he did briefly mention his plan, saying, "I'm actually scaling into growth-sensitive names into weakness over the next 8 weeks, but this could be an ugly May and June." We all knew something was going to blow up, and it looks like it's everyone's portfolios and economic growth. So he's buying into weakness, and for me, here are my thoughts. I like to remind myself of the facts, and statistics show that trying to time this market so most traders won't be long-term investors. Now, yes, obviously, if you are a full-time professional trader and you've been doing this for decades and you've spent your 10,000 hours and done all the courses, then this can be a great time. But for the vast majority of people, 90% who try to time the market will end up losing money. Now, if you don't need to sell your portfolio over the next couple of years, then there's going to be loads of bargains going on sale. We have the ARK ETFs at 50 to 60% off, huge tech stock giants like Meta and Netflix at bargain prices, and obviously cryptos being down 50 to 80%. There's actually too many things going on sale. Now, for me, I will be sticking with crypto, and my next big buy will be a Bitcoin price sub 30,000. And I'll probably be buying more C20, building up my stack for the next big run, because I know every time we have these huge runs in crypto, I always, without fail, look back when prices were getting smashed, wishing I had bought more when prices were low. So this time, I'm going to make full use of this period to build my stack, as prices may never hit these levels ever again. So there you are, guys. Hope you enjoyed. Now, obviously, this is not investing advice. You must do what's right for you. But for people with a longer term view, would you rather buy stuff when it's low or buy stuff when it's high? And with that being said, just to say, if you did enjoy anything in the video, then drop a like. And a big thank you to everyone who does. If you haven't yet subscribed, click below and join us. Got some great videos coming up that you don't want to miss. Okay, cheers guys. Thanks for watching, and I'll see you in the next video. Bye for now.